On today's episode, we'll be discussing self-discipline and money. And we'll be doing a two-part series with two special guests that we have, Mr. Del Monte Williams and Miss Nicole Sanders. And we've been reading a book, No Excuses by Brian Tracy, which is one of my all-time favorite books. It's really impacted my life in such a special way. And it talks about the power of self-discipline and at the end of the day, not making excuses for anything that happens in our lives and taking accountability, taking responsibility. And this book is such a powerful instrument and tool in creating success. And so we've been having this discussion with some Generation Zers, and so we want to have some open dialogue and discussion about self-discipline and money. But first I want to introduce to you Mr. Del Monte Williams and allow him to tell you a little bit about himself.
Hello, my name is Del Monte Williams. I attend Southern University. I am a senior majoring in business management and finance, and I'm from Millville, Louisiana.
Okay. And we have Miss Nicole Sanders.
Hi, I'm Nicole Sanders. I am a junior at LSU. I am majoring in business marketing with a minor in personal finance, and I'm from Fort Worth, Texas.
Okay. Well, thank you all for both joining me on today's episode. It's always great to get the perspective of, persons that are the next generation. And so as we have this discussion about self-discipline and money, I want to open it up to each of you as it relates to some of the things, I guess, as the next generation. What are some of the things and some of the takeaways that you have, I guess, taken away from being more disciplined as it relates to your money?
I guess for me is saving and investing. I feel like I've always started a savings account, but never have always taken from it and never had that discipline. That's there for life or for an emergency or whatever. So I feel for me I need I've been learning from this book especially and from you, Mr. Austin, to save my money, and that is for for a purpose and for a future, because we will need it, and so I guess that's what I've taken from it. And yeah.
Okay. And you can tell the audience a little bit about one of your accomplishments that you've actually applied from, I guess, our reading and discussion.
Well, I got I had a deadline to meet to get to get a savings account because everybody else has one, but I don't. And so I finally got one and immediately put money aside in that savings account. But I did it to where that I don't have to. It's not easy access to where I can take from it. So I got it at a separate bank from my checkings account, and so that way I can just deposit that money and it'll be hard for me to take it out. So yeah, that's one of my accomplishments. And the book does talk about how we associate happiness with saving, and I think it really made me so excited that I put that money away. And so I feel I'm more inclined to do that now, just because I was I'm really proud of myself. So yeah.
That's great. Great job.
Yeah.
Great job.
And for me, in regards to savings, I've always had a savings since I opened up my checking account when I was 17. And reading this book is giving me the information that I need to know that, hey, instead of a savings, you need to go a little bit further with money to get financial discipline and financial wealth. So that savings is not really gaining me any money, but since I do already have the discipline to invest in that savings account, maybe now go a little bit advanced and open up a CD.
So, great feedback from both of you all, and just a few things that I guess that I'll share based upon, I guess, my experience as well as based upon the reading that we've done together. The first thing is that when it comes to saving money, it requires discipline. So it's not always an easy thing to ultimately do, but if we want to be successful, we want to create generational wealth, then it first starts with the power of being disciplined. And we want to begin to ultimately look at, when we make money, we have to ultimately begin to pay ourselves first and foremost. So what I mean by that is that, every time I receive a paycheck or someone gives me, some money. We have to set that aside and put that into savings to invest into my future. And so if we have our paycheck and we the first thing that we ultimately do is we pay everybody else when it comes to AT&T, when it comes to our car insurance, when it comes to our apartment bill, our mortgage, whatever it may be. If we're paying everybody else and we never put anything aside for ourselves, then that's going to limit or hinder our ability to create generational wealth or create success for ourselves. Another thing that you hit on is as well, once we come up with that discipline of actually setting aside money, is that also identifying investment tools and investment options. And so we talked about an analogy or a situation where the power of compounding interest. And so I think the example that we went over together in a previous discussion was we took $40,000 and we looked at how you put $40,000 in a typical savings account that's generating a very low rate of return versus taking that same amount of money and if you're putting it into an investment option which generates you somewhere between 9 to 14% annually, then how that $40,000 is the same $40,000 but it end up being about 5 times as much over the span of 20 to 30 years, even though it's the same amount of money that's being set aside and or invested. So once we have that discipline, then ultimately also looking at investment options to ultimately grow our money, which is the compound interest aspect of things. And then one thing that you hit on as well, it's rewiring our mind and our philosophy to associate happiness with the ability to save, because so many times whether we are frustrated or whether we're excited, okay, hey, we made some money, first thing, okay, I'll go spend it on something that ultimately doesn't generate me a return on investment. And so when we do that, I mean, don't get me wrong, we should definitely do or set aside a budget that allows us to take a certain percentage of our revenue, of our income, to be able to set it aside for things that we want, things that we enjoy. But first and foremost, primarily, we should tithe our money, and then as well, we should put it aside in some sort of savings and some sort of investment account. And so, in conclusion, being disciplined with your money, it also leads to so many other aspects of our lives in becoming more disciplined. So if we can have the discipline to set aside our money, then we can also have the discipline to be disciplined in our time management, be more disciplined in our personal health, our physical fitness, in various other areas of our lives. So great discussion about self-discipline and money. So what's one of the takeaways that you all want to share and leave with our audience?
One of my biggest takeaways is from the recent ongoing things with COVID-19. I definitely think that people have been families and companies and businesses have been struggling because they didn't have money saved up, or they struggled with money, and they were paying their employees or paying other expenses. They didn't save money or have something to fall back on. And so I saw even on the news or friends and stuff and family. So it definitely taught me to for future reference is to do that for myself and for my family, my future, so that I don't have to rely on the government for something, or to rely on other people. Or so I think that was one of my biggest things and lessons.
Great. And what's one of your takeaways?
I definitely agree with Ms. Nicole there, but another takeaway that I took was the fact that sometimes when we're rising in our profession and we're getting that salary increase, we tend to increase our expenditure habits instead of increasing our savings amount as well. So it's a great thing to do, once you're getting more money and making more money, to treat yourself a little bit more, but also to increase your savings as well, because you just never know when the next pandemic or disaster will happen and you may need to rely on those funds.
Very good, very good. And so, with that is, I'll share, I guess, my takeaway based upon information that you all have both shared is, number one is that, the importance when it comes to saving, one thing that you mentioned earlier as well, is making sure that you create a separate, I guess, account whereby you don't have easily or readily access to your savings account. So I don't suggest that it's ultimately tied to your direct checking account, or if you do have a savings that is, then create a different savings where you're really putting the majority of your money into an account that's not easily accessible. And so you have that emergency fund that you can ultimately tap into if needed. So you should create an emergency fund as well, in addition to having different savings and investment accounts. So when emergencies do hit, you have the resources to be able to tap into for emergency purposes. So that's very, very important. And then as well, one of the takeaways, I guess, that I also share is, in business, as we mentioned, COVID-19 has ultimately hit. So it's very important to make sure that, we have the proper financial structure in place in terms of a business, or if you're an entrepreneur, aspiring entrepreneur as well, you have to have those financial protocols and structure in place to know, if I'm making a profit, and I need to also incorporate the ability to, save, or know how much I need to generate to ultimately have a cushion to be able to save and set aside from just being able to meet my routine expenses. So you talked about many times in a business, okay, well, we create this revenue, we have this income, and we're paying employees, we're paying expenses, so on and so forth, but what's our allocation for this business as well to set aside that money so that if, we have seasons in business, good times, bad times, and you have to be able to tap into that. And so as well, with HGA, coaching and consulting, we also have a program that is geared and dedicated towards business owners and entrepreneurs, that provides virtual CFO or Chief Financial Officer services, whereby we're able to help businesses and entrepreneurs create the financial structure that they need for success. So in closing is we want to make sure that we prioritize our money, making sure that we pay ourselves first by our ability to save and invest, and we ultimately want to associate or reward ourselves by putting aside money and being able to celebrate how much money we've put aside, because that's what's going to allow for us to create that generational wealth, or having that success when it comes to our money, or what we have in our bank account, to be able to as well to be a resource to others as well. So it's not just about resources for personal gain. Oftentimes for a business standpoint as well, you have to have a resource to be able to sustain or to be able to fulfill the mission. So it's very, very important to make sure that money is a priority, because as well, individually as a family, to be able to provide for those that you ultimately love, you want to have the resources to make sure that you can give them experience, or help create experiences and opportunities for them that are positive, that are good, and have the things that they should have in their lives. So that's the power of self-discipline and money.